Hello everybody, good to be here once again. I think I've been coming to this festival for the last 15 years, I guess. And it's always a pleasure to be here. Nuno, my name is Peter, Nuno you know. So, let's start. Nuno, your first time to Slovenia?
Yes.
Really?
It's my first time to Slovenia. Actually, it's not fully accurate. I was here when I was 9, but the name was not the same. So I'm very happy to be here for the first time with the name of Slovenia.
Okay, what are your impressions?
It's very exciting. I mean, obviously, Slovenia is a relatively small country. I'm from Portugal, which is also a very small country. But the level of excitement I've seen over the last few days has been incredible. It's been raining a lot, though, so I haven't really checked it out. I've heard it's sort of normal. That's why you're so green, is that it?
It's not really normal. I mean, we also have sunshine every now and then.
Very good.
Yeah. Comparing Slovenia to the Bay Area where you work nowadays?
I mean, it's difficult to compare the Bay Area to anywhere that I've personally lived in. And I've lived in Beijing and London and other places. I think geographically it's also very green. It has a lot of forest, etc. It's a really exciting place to live in. As a place, it's become incredibly expensive to live in. I mean, we're talking about ridiculously expensive to live in, and I think part of it was really the fault of the tech industry and the way that things have been basically connected to the government side and to state government, to the cities there. So it's really a place that has changed, I think, a lot over the last decade or so.
Is it still a dreamland?
I always give the analogy, right? I mean, sort of the Christian analogy, I guess, between, hell and heaven. It's closer to heaven, but it's not really quite. So it's like purgatory. You're going through pain to one day maybe getting to heaven, but you're just, you're going through pain. So it is the dreamland because there are so many players there. You're meeting people that are doing exciting things all the time. You do meet a lot of people that are not doing anything particularly exciting, that might be in the corporate world or that might be doing the next, iteration on something that's existed for a long time. So it's not true that everything that's done in the Bay Area is exciting, but you do meet a lot of exciting people that have incredible experiences.
Right. At the beginning, when we talked before your presentation, you said your presentation would be rather technical, but I didn't have that feeling. It was very much into business.
Yeah, I was trying to sort of connect the world of business and engineering together through the presentation, and effectively, as I was saying, give this some actionable logic, right? So this is, as a guest lecturer to Stanford, I was asked to talk about this and really trying to link that back to what are the business implications for marketing in particular and product management functions.
And now we come to the real stuff. You told me I could ask provocative questions.
Yes. I shouldn't have, yes.
You shouldn't have, but here they are. Here is one provocative question. Sir, do you think, will Tesla survive?
I think they will likely survive because it's maybe a question of too big to fail at this stage. There's too much capital in it. But I think Tesla will look very different over the next 1 to 2 years than we've seen it until now. And they're going to go through very significant trouble. I mean, they're already in trouble. I think they'll go through very significant trouble.
Too big to fail.
Too much capital in it.
I know, yeah, but that it's a private, who will save it then, if you're saying too big to fail?
I think it's likely that the investment fund or organization that saves them, it might be through a trade sales, it might be through investment, etc. I think whoever saves them will actually have to change some of the stuff at the top. And I'm not sure, it's going to imply that Elon is no longer involved with the company or if he steps to more of a chairman role in the company. But I certainly think there needs to be very significant change in how they do business.
Okay. In 22 years, it's going to be completely different, you said. How different? What's going to happen?
In 20
years, you said, right?
Yeah.
It's going to be a completely different company.
I mean, the company, or do you mean Tesla, or do you mean
Tesla? Yes, Tesla. Yeah.
I didn't mention 20, but that's fine. I think Tesla, from the perspective of a company, is at the forefront of electric cars. I think the European manufacturers are catching up for sure. And so as they're catching up, the pressure is going to be there. Would I prefer having a Porsche that is fully electric, or would I prefer having a Tesla? It really depends on what Porsche puts out, because naturally people would probably be incentivized to say, I'd probably prefer a Porsche. So in some ways, Tesla had the advantage of being in the market very early. 10 to 20 years down the road, my prediction is that we'll have a lot of self-driving cars on the road, right? So maybe Tesla's approach to it of saying, this is no longer going to be about the pleasure of driving, which is what Porsche is all about. It's going to be about people moving, right? Maybe that's the right approach. It's about actually detaching people from the road, having a nice experience. Hopefully that over time will be more and more efficient from a carbon footprint perspective.
How sustainable can a company be, or in the long run, without having profits? Let's talk about Uber, for instance.
I don't think it can be very sustainable. At some point, this is not the new economy. I mean, people like you and I were around 99, 2000, and we remember people talking about the new economy. Profits were not needed. Nothing was needed. I don't think I think we've gone past that. There's no new economy construct. So they do need at some point to show profits. If anything, to actually have a liquidation event to someone, either they IPO or they get bought by someone, they need to have profits at some point in time.
When?
Well, that's a good question for their CEO. I don't know. They've just received a bunch of money from SoftBank, so I think they're okay on cash for a while. But at the speed that they're burning, the fundamental question is, when do they actually start generating profit? I think that's, for me, the next stage of evolution. So if in the next 2 years or so there aren't any proof points that they can be a profitable business, or certainly a cash flow positive business, I think they're in a little bit of trouble.
Can we move to your topic a bit? Now, you said you were mainly talking about churn prevention, retention, and all that. Where has the good old salesman gone? Is he dead?
No, I don't think so. I think the good old salesman is still alive and kicking, certainly in the enterprise space. And I think for a long time people thought that software as a service was going to eliminate the classic, salesman that's running around, going through companies and trying to get clients in. The more relationship-driven salesperson, the more classic one. A lot of people were saying that the world had moved to inside sales, and inside sales was going to be the future. I don't think it's true. I mean, we see a lot more enterprise plays that do require heavy lifting sales. And so I don't think the good old salesman is done. I do think that salesmen need to have more and more product context, and they need to have more and more the building of relationship as a core skill that is not just about whining and dining. It's really about what is the proposition that I'm bringing to your company. It's a little bit like being solution driven versus this is our beautiful product with all these feature lists. It's really, how can I solve your problem with our product, right? So your problem is the first thing I need to do.
Now, how important are relationships nowadays? I mean, with all that software, with machines talking to us, us talking to them. How about you and me? We still do talk. Mm-hmm. I mean,
I think relationships are incredibly important. This is a bit of a paradox, right? Because you'd say Silicon Valley is the center of detachment of relationships. It's the place that's promoting people not being connected, not actually interacting on a daily basis, etc. Yet, my realization is actually Silicon Valley lives on networks of people that interact with each other all the time. It's very difficult to do business in Silicon Valley, raise money, create your startup, hire people, etc., if you're not systematically networking. So it's very funny that the place that seems to be detaching everyone from talking to each other is a place that's driven by people talking to each other.
So would it be fair to say the more technology, the more you have to invest also into relationships?
I think it's fair to say that, and I think it's also fair to say that technology should have boundaries. And by those boundaries, I mean there should be regulation. I think what Europe has done, I'm not sure GDPR is the right solution, but it's certainly someone that acknowledges there's a real problem around privacy, and so that needs to be solved. So technology needs to have huge boundaries. We now are hearing that Google has announced that they're going to have an option for you to know how much you're using, and if maybe you should stop using YouTube, et cetera, et cetera. So I think it's actually in the best interest of tech companies to give these tools back as self-regulation to their users to avoid the tragic events that then we might have of kids that are totally detached that go to rehab. I mean, you go to Korea, there are rehab centers for kids that play too much, right? They're put in these rehab centers. I mean, this is fundamental issues that we need to solve as an industry.
To grow your company, to expand your revenues, to expand the customer base, this is also exciting. I mean, it's perfect, adrenaline and all that. And nowadays, it's about prevention of the churn. Mm-hmm. That's boring. Mm-hmm. And all that data-driven stuff, mm-hmm. where you look what people do, where you find out about their habits and all that. I mean, where has the excitement gone?
Yeah, and my point there is growth goes hand in hand with boring. Growth goes hand in hand, not just with great ideas, but it goes hand in hand with being fact-based. Doing data science, analyzing your data, figuring out what's next. And I think all the great successful companies that have been sustainable in building their businesses through growth, they've done that. It's incredible that we still see mammoths having growth, like, even Facebook with all the bad press they've gotten recently, even players like Google, they still have growth. And I think, in my opinion, even Amazon, everyone says Amazon's incredibly entrepreneurial, whatever. Talk about a data fact-based company. Amazon would be one company that would be top of mind, right? So being actually boring around that part and then being creative around potential solutions that solve issues that are in the market, I think is the right combination. And it generates growth per se. And it is sexy, right? Because some of these businesses never existed before.
If one is so data-driven, one does why buy Washington Post?
That's a very good question. I think there's still, the geek in me says there's still a connection that we have a little bit to the past, and we want to experience things in the previous way. I think the consumption of Washington Post digitally is easy to explain. They have high quality reporters, they have high quality articles, and in some ways I think we're going to have more and more, certainly for the next few years, a polarization of the world where there's the easy content and there's the more complex content, and people are going to go one way or the other somehow. I think over time, my hope is that quality content starts becoming again more and more mainstream, and then we sort of have a realignment of public opinion linked to that, so that the democratization that technology does offer actually is a positive thing. It's technology plus high quality content versus technology versus fake news and crap. So for me, that's the cool, maybe I'm smoking dope, maybe I'm believing in something that will never happen, but that's the cool thing that can happen. But right now I think those worlds are polarized, and you have people that really want to consume high quality things, and that's great, and that's why Washington Post is doing how they're doing, and many others are.
So do you think now technology with the GDPRs and all that, and the potential regulation that's going to come to the United States, will technology be, let's put it this way, tamed in a way?
I think technology needs to be tamed. I mean, there's no doubt in my mind that it needs to be tamed. I used to work at the beginning of my career in a very heavy regulated industry, telecom, in particular with operators. And I mean, it is part of the business. I'm not sure that there aren't things that some of these players, these tech players, can do to avoid some of this regulation, but they need to be very proactive about it. They need to be very aggressive and self-regulating. And what we've seen has been a clear manifestation that some of these players have not really abided by their responsibility towards their users.
I mean, it's amazing. Now, everybody has the notion that you guys in Silicon Valley, you're also socially responsibility and all that. And on the other hand, we've got all those strange things happening. Where is the corporate social responsibility nowadays?
I told you at the beginning, Silicon Valley is a strange place. So we live in various worlds at the same time without necessarily thinking that we're actually living a paradox in and of itself. I think there is a notion of social responsibility in liberalism, but at the same time, it's also an intrinsically capitalistic society, because a lot of people have made a lot of money in the market. So these two things sort of go hand in hand, and sometimes they clash. Sometimes they fundamentally clash.
Now, at the beginning of our talk, you said something about the new economy and that profits are needed, and it's more or less some things have remained traditional. Now everybody's talking about the ICOs, the blockchain, the cryptocurrencies, and so forth. How would you compare these times with the new economy hype?
Well, first and foremost, I do believe in blockchain as a technology, and I think we haven't seen much of it yet. There's a lot of hype around it. And so this reminds me a little bit of the early days of the internet and TCP/IP as a protocol. I think we're still going to see a lot more out of blockchain. In particular around ICOs, I think it's an interesting construct on how to make an asset publicly available through fiat. And there's nothing fundamentally wrong with that. But again, we go back to regulation. Should it be regulated? Yes, right? I mean, if it's like a security, why shouldn't it be regulated? So I think we had the Far West moment in the history. It was very fast. The Far West moment in the history of blockchain and ICOs, and now we're going to end up with sort of, actually very significant ICOs that make eminent sense, and not just people that wrote a white paper and somehow raised 15 to 20 million, which seemed to be the amount you would be able to raise.
But would you agree that some events are actually really crazy that are occurring within?
For sure, and there's reported fraud, right? I mean, so I'm not trying to say that it's not. I mean, there's been fraud in ICOs. There's been a lot of things that have happened that are not the right thing.
How would you say, how much of all those undertakings are frauds in percent?
I have absolutely no clue. I would say a very small percentage are of real things that will get implemented specifically. That doesn't mean that all the others are fraud. It means that all the others I don't think will ever actually get fundamentally executed. And that would be for me a small percentage. I don't know what it is. I have no data to make that decision, but I do think so. And I know I'm in a country that is been at the forefront of that and of that innovation. So I'm not saying, you guys have all done the wrong thing, because there was money at the table to raise and you raised it, right? Now the question is, are you asking me, are all these companies going to be around? No, but it was the same thing in the good old IPO days, if you remember, of 99, 98. A lot of these guys failed. They failed miserably, right? Webvan, et cetera, et cetera. And then we had Google, and then we had Baidu, and then we had Alibaba.
Okay, but that was regulated.
And now we're getting regulation as well.
Yeah, but we have had a period where there was no regulation.
Correct. Yes, we've had that advantage or disadvantage for a period of time, depending on how you look at it.
As a venture capitalist, would you say that the ICOs are actually crowding out your industry?
I don't think so. I think there was a lot of concern from VC funds through late last year as everything was getting super hot. I don't think so. I do think there's horses for courses. Certainly in Silicon Valley, I haven't seen a lot of that effect. Maybe more in Europe, coming across a couple of companies in Europe that then, basically don't necessarily want to go and raise an equity round. But I haven't seen a huge amount of effect in Silicon Valley.
Okay. Are you personally involved, or your companies involved in the ICOs?
I've been involved in a couple of ICOs as a board member, one has been a very successful ICO. The other one maybe less so, because we haven't gone through the ICO yet. So we've decided to delay a little bit the process. So I have, and it was a board with venture capitalists and boards that are well functioning, and we made that call to go and raise the money. These are companies that already exist for many years, that have raised equity rounds, that have products out there. So this was a natural manifestation of their economy into a virtual economy at that point in time. So we believed in the projects.
So basically, but one could basically say that, it's a variety of different things, but more or less, it's the bottom line that counts in the end. It is the bottom line that counts in the end.
Oh, for sure. Yeah. At the end, it's what matters. Yes. But we have to have a responsibility. Companies that are funded, that have boards of directors, etc., we have to have a responsibility in making decisions that fundamentally also mitigate the risk of the company getting sued, etc. So we need to make decisions that are thoughtful at the end of the day. It's not just about money.
As an entrepreneur, if you're young, you're interested in profits, of course, to sell. But on the other hand, so many people are interested in big revenues, about being important. When does the ego get inflated?
In my experience, it gets inflated when you start being in the news a lot. There's the famous book from Jim Collins, From Good to Great, that talks about level 5 leaders, right? That says they normally are in the news and front pages 1 time to every 2 times that level 4 leaders are. So actually, it happens when people start being in the news a lot. That's, I think, when their ego go up. Maybe that was more of a joke, but at the end of the day, I think it's very difficult for a CEO to stay in his own place as the company becomes hugely successful. My experience is the best CEOs manage to do that. But like everything in life, we're human, so they go through their ebbs and flows of, I need to be really important, maybe I don't, and they step back from it. But being in yourself, being focused on the company, being the level 5 that Jim Collins talks about, I think is very, very important and fundamental.
Being the CEO of a startup, building up the customer base, the audience, whatever, when does this CEO, have to step back, move away, and bring another guy? Why am I saying this? He takes too much care of the company. He's emotionally involved. He would like to see it grow. And on the other hand, too much growth with incentives for the customers, that can be dangerous. Yeah. It's about churn prevention.
I don't think there should be a timeline to the CEO to decide whether at some point someone else needs to take over or not. I've seen CEOs that even day one, you couldn't be sure that they would scale the company. So they were great startup CEOs, but we weren't sure they could scale up the companies, and they had incredible jobs at it. I have one person in mind that might IPO their company over the next few years. I still think he's going to be a great public company CEO. So I don't think there should be a statute of limitations in effect to being CEO. That said, I think there's a responsibility both from the board of directors and from the CEO, in particular if you're talking about founding CEOs, which is I think what you're alluding to at some point say, am I still the right guy to run this thing? But it should be a very, very thoughtful decision, because it's not really that I'm deeply involved and it's my baby. I mean, Larry Page, Google is his baby. He's still the CEO of Alphabet, right? And we've seen successful CEOs scale themselves and maintain that composure through time. So again, I don't buy at some point you need to be replaced. There are situations where the CEO is just simply not the right CEO and founding CEO, and at that point, you need to move them to another role in the company if that role exists, or maybe the person actually wants to go and do something else, and that's also true.
The founding CEO usually has a special gut feeling for the market. Mm-hmm. And he does care about data, but his gut feeling is to him more important. For you, what is more important, the gut feeling or the data? Or how do you, better said, how do you align those two?
I think the piece that is most important is intellectual honesty. I normally don't like investing in companies that have CEOs that I have difficulty talking to, where we're having a real intellectual, honest discussion. And so those two things go hand in hand. Gut feeling is very powerful. I think with gut feeling, sometimes magical stuff happens. I'm not sure, there was a huge amount of analysis on Google as a search engine at the beginning, but there was clearly a gut feeling that they were going to kick everyone's butt, so to speak, in the market. And they got lucky. In some ways, they had a great tool. They got lucky. It was at the right time, that tool. They raised money at the right time as well. But today, if you ask maybe Larry, is he a data-driven guy? Probably he's very data-driven as well, because he now has a lot of data to look at. So it's a little bit horses for courses in some ways.
I mean, does one become a data-driven guy if one has a gut feeling, or do data-driven people just don't have the gut feeling?
It's difficult to say. I think you can build, if you have a lot of gut feeling, you can build sort of the data side and really trust the data and what's being told to you. It requires, as I said, a huge amount of intellectual honesty. Vice versa can also be true. I mean, I've seen people that were coming from very scientific backgrounds that have always been working on data stuff that have become really good CEOs, and that sometimes are fundamentally driven by their gut or by what I call their muscle memory, things that sort of they acknowledge and that allow them to manifest themselves in a muscle memory type of way.
You can operate with data when you obtain data. So usually first comes the company. Now, when you start the company, you as let's say, a data-driven person, would you believe somebody, would you invest into somebody that has the gut feeling, or would you trust more the market research or the test on the market?
That's an impossible question. I would trust all of the above, because I do need to see someone that's fundamentally passionate about the company they're trying to build. Building companies, being an entrepreneur is very, very painful. And I've built my own fund, for example. I've built a company way back when. And it's really incredibly painful. Ben Horowitz talks about this in his book, and he says, if you're always sleeping well at night, etc., probably you're not really pushing yourself that much. There needs to be, he calls it the pain of being an entrepreneur. And so, you know, at the end of the day, for me, that is sort of, you know, that passion needs to be there. The moving when you don't quite know at the beginning of a company, you need to have it. You do need to have the gut feeling. Should I put the button here? Should I do this there? Should I go with inside sales or not? Etc., etc. So you need to have it. But the ability to say, I am going to be data-driven. I will do market research to understand the market at the beginning. And as I get more and more data, I will trust my data. That's also vital. So it's, again, all of the above at the end of the day for me.
User experience specialists must have gut feelings.
They have to, yes.
Okay. Now we are slowly coming to the end of this short discussion. Let's move to Slovenia. Have you ever thought about investing into Slovenia, in a Slovenian startup or a Slovenian company?
I've never seen a Slovenian, I sort of lie. I mean, obviously Layer, which is co-founded by Tomasz Stolfa, is a company
and he's a good friend of yours, right?
He's a very good friend of mine. So we did look at them in the past. At that time I was very consumer-driven and very consumer-focused. And so I have looked at investing in Slovenian companies, not a lot, to be very honest. And we saw Outfit 7 very early as well, and we didn't, which in retrospect was a huge mistake, because obviously, but they didn't want money, so that was sort of a self-professing issue. Maybe we could have convinced them more hard. So yeah, I've looked at Slovenian companies. I don't particularly look at Slovenia, so I wouldn't say it's one of my top markets that I would look at. But we're multi-geography, both from Strive side
and
Christian Robotics side.
What are the top markets?
Sorry?
What are your top markets?
On smart hardware, I would say the US, China. We're looking a little bit increasingly also a little bit to Far East, Korea and Japan, but basically those would be the top markets.
There's so much talent in Slovenia and also drive. Mm-hmm. Now, one of the problems here is that the local financial system is quite underdeveloped. There are not very many active. It's usually more or less banks, mm-hmm. and those are fine, but you don't get too many venture capitalists and so forth. But when you guys come into Slovenia, you say, well, Slovenia, if you have the headquarters, if you're established, let's say, in Luxembourg or somewhere else, that's fine. And those youngsters, they take the money and they start to develop and then they move.
I think
is it a problem for this country?
You need to think about your ecosystem twofold, right? The talent that you're generating, which is of Slovenian citizenship or nationality, and the things you're building in Slovenia. I come from Portugal, and in Portugal, I think at a certain point in time, we realized our top companies at a certain point in time might not be headquartered here anymore, and they'll be somewhere else. So what's important is, do we keep at least a chunk of the company here, be it engineering, be it operations, be it certain other areas. And I think that's the right way to go around it, because what we're trying to create here as an ecosystem is just what I call a spillover effect, is that these people become really, really successful and they start giving back. They start giving back through being angel investors. They start giving back by creating their next company, where some of their employees leave with quite nice paychecks and decide to do their next company in Portugal again. And we're trying to create that type of ecosystem. So again, you know, having someone that lives in Silicon Valley that is creating their company there, that has operations as well in Slovenia, I think that's actually great. And you know, it's again, there's this mentality of, oh, we're creating all of this, but they go abroad. And what's wrong with that? I mean, at some point, they are Slovenians. I am Portuguese. You'll try and give back. You'll try and do something that helps your home country. And I think that's the ecosystem we're fundamentally trying to create in smaller countries like ours.
You can be very global, but in a way, one always remains local. One can be very global. Now, and the last question. Now, there are so many, in the old times, I mean, 10 years ago, everybody was looking for opportunities, business opportunities. Now we say, don't look for opportunities, look for problems that you can solve as an entrepreneur. What is the biggest problem one can solve nowadays?
I think there's a huge amount of problems we need to solve. I mean, there are countries where healthcare is still a huge issue that is not solved, just basic healthcare. I think
Would that be a business opportunity?
It can be, yes, I think it is. But you have to be very selective because it's a mess per se. I mean, as I was telling in my previous presentation, having done a ketogenic diet, having invested in that company, they're very, very, very focused on just reversing diabetes type 2. That's their objective function. And they're doing it from outside the system in some ways and now trying to go back into the system. It's really, really tough to affect change if you go full on into the system, like Amazon is doing with Berkshire Hathaway, etc. We'll see what happens there, where they just go full on and they create their own mechanisms to provide healthcare to their employees.
Doing good can be good business.
I think it can be great, and I think we'll see a lot more of that in the future.
Thank you very much, sir.
Thank you.